Could you maybe explain to our listeners what would motivate someone to move into the broker channel and the difference between kind of the two different models?
Yeah. Yeah. So, for the first 15, 16, 17 years of my career, it's been consumer direct, right? So I'm used to marketing to consumers who come in, and the vast majority of products are going to be your Fannie, Freddie, or, FHA, VA with Ginnie products, and 30-year fixed.
Yep.
Sometimes you get a 20-year, every once in a while you get a 15-year. But for the most part, you're selling 30-year fixed in, these very limited product sets. And when you look at it from a marketer's perspective, marketing cost per funded loan, if we just make up numbers and say, you're somewhere around $2,500 in marketing spend to get a funded loan. When you look at the wholesale channel, when you look at loan officers who first get exposed to what the broker channel can do, you're no longer limited to just what your company offers. You have a wide array. You could be working with potentially 200 plus wholesale lenders,
right,
that offer reverse mortgage, non-QM, you name it.
It's almost like a marketplace to find the best option for your borrower. You're not yep.
And that's the key point, right?
Yeah.
What's the best option for your borrower? Mm-hmm. It might not be that FHA loan. It might not be that conventional loan. It might be something else. And so you're able to truly look and work with that consumer, understand their need, their unique situation. Maybe they need a bank statement loan. Maybe they need a second mortgage and their credit score is a 640, which most lenders don't have that product. Mm-hmm. But as a broker, you can go out and find a wholesale lender that's willing to offer that product. And in some cases, it's, there's hard money that can come along with it. And you're able to satisfy that customer's needs with a lot more product in your arsenal.
Yeah. And get a deal you might not have been able to get with a limited portfolio of products, which is why in like a high interest rate market, you see these transitions where we might not be able to give you a better interest rate, but we have a bunch of other products that might be able to provide some benefit, right?
Yeah. You don't have the mass market for the refi.
So when you tie that back over to what your marketing cost per funded loan is, since you're not limited and you can help a lot more customers because you have a wider product set to work with, your marketing cost per funded loan could be $1,500, and because you're able to convert that many more consumers. And then, a lot of the brokers that I work with, yes, the individual loan officers are paying for their own marketing, mm-hmm. which is different and a risk, right? Are you willing to bet on yourself and spend marketing dollars to generate leads that you need to convert? And so they're spending their own money, but they actually get significantly more of the revenue generated from that loan.
More bips.
So all in all, they tend to make more money, but you're betting on yourself.